In today's video, I'll be showing you one of the best strategies to generate consistent income from cryptocurrency. The world of crypto can seem like a very complicated space as there's always a new crypto project coming out. When it comes to any investment, it's always important to have a clear-cut strategy so you can maximize your gains and limit any potential losses. In the fast-paced world of crypto, this can seem very complicated as there's always a new crypto project coming out, and keeping up with all of them is a task that's near impossible. It can be easy to focus on the fast money that can be made with crypto if you're seeing news headlines on someone becoming a millionaire from investing in Dogecoin, or a person retiring at the age of 30 from getting in early on Ethereum. But actually replicating any of these results is near impossible, and it's virtually the same as trying to win a lottery ticket. But is there any hard science or historical data that you can use to actually get a clear-cut strategy that will show you how to consistently make a return with cryptocurrency? Focusing on the next 100x and just buying any crypto project that comes out, hoping that it will take you to the moon, is not a viable strategy. By the end of this video, you'll know some practical steps on when to get into the crypto market, what is the best time to sell your investment and maximize your gains, and ultimately what are the best cryptos that you should be adding to your own portfolio. If you find the content helpful, make sure to drop a like for the YouTube algorithm and subscribe to the channel so you can stay updated with future content. Just as a disclaimer, this video is only for entertainment purposes. I'm not a financial advisor, and this is all just my own personal opinion. Firstly, let's start with Bitcoin. This is amongst the most notable and most recognizable cryptocurrency that there is. It's essentially the anchor that holds the crypto market together, and for the majority of the time it will influence the price of all other cryptocurrencies. Essentially, when Bitcoin is rising in value, this will have a flow-on effect to other altcoins who will also see an increase in price. And this can also happen in reverse. If Bitcoin is doing quite poorly, this tends to affect the overall cryptocurrency market, and you will also see alts losing some of their value too. This principle is a general rule of thumb, and it's not gospel, so there are times where this may not necessarily happen, but this is something to keep in mind when you're looking at investing. What is the Bitcoin dominance, and is the overall cryptocurrency market rising in value? Bitcoin can also move sideways, and when it's not really doing much in terms of the price going up or down, this is also another great opportunity for altcoins to rise in value. So when you're looking at making an investment in the cryptocurrency market, you want to look at Bitcoin dominance and if the overall market cap of cryptocurrency is rising. A great place to do this is on CoinGecko, and it will have both of these metrics outlined for you at the top of the web page. So as you can see here, Bitcoin dominance is at about 41%, and Ethereum is sitting at 16%. So if the market cap for cryptocurrency is going up in value and Bitcoin dominance is dropping down, this means that we're essentially in an altcoin season, and that altcoins have a lot of promising potential and may be gaining a lot of value in a short space of time. In comparison, if the overall cryptocurrency market is dropping in value and also Bitcoin is losing some of its value too, then this may not be a great time to buy in the crypto market. Keep in mind that these things can change rapidly because Bitcoin goes through massive price fluctuations in a very short space of time, so whether or not the market seems like a good or bad investing opportunity can change day by day or even week by week. Looking at indicators like Bitcoin dominance and overall market value can be a great place to start if you're thinking of getting into things. But of course, can you just be a pure hodler and never sell off any of your money no matter what the market is doing? Or does this put you at too much risk of being at the mercy of market conditions and never taking up any selling opportunities to maximize your profits? An excellent strategy can be taking profits along the way. This is mainly done for altcoins because they can go through some of the most rapid price changes. Setting yourself a value of what you're happy with in terms of a return is a great strategy, because often when altcoins are pumping and rising in value, this momentum for the majority of the time is not maintained and will eventually drop off and lead to a dip in price. Setting yourself potentially a goal of selling off a portion of your investment when you say double, triple, or even maybe quadruple some of your money can be a great strategy to help you hold on to those profits without losing them. When you sell off some of your investment, a great strategy can be converting that money into a more stable coin like Ethereum, Bitcoin, or maybe USDT as well. A very practical and straightforward way to do this is using one of the free software wallets offered by Exodus, and this allows you to transfer coins on the application when you have it open on your computer. If you're interested in learning more about transferring cryptocurrencies or on a great place to store them, check this video out on screen and it will give you a complete guide on the Exodus platform. It can be better to not wait for a massive drop in the price of a cryptocurrency to scare you into selling off your investment. If you have key time points on a percentage gain that you're trying to make, then this can be good because you can take some profits along the way. Just holding on for dear life can be a losing strategy, because at some point that rocket is going to have to leave Mars and come crashing down to Earth, and you don't want to be left holding the bag and losing out on some of the profits that you could have taken along the way. Also, looking at how much the price of a coin has changed can show you how much potential profit you could make from it. For example, a lower cap coin, those sitting outside of the top 20 crypto investments, have a lot more potential for more rapid price changes. For example, looking at a coin like Arweave, which is sitting at number 48 in terms of market cap, it would be a lot easier for this to go from a market cap of $4 billion up to $20 billion in comparison to something like ADA going from 64 billion to 128 billion. So getting a double in terms of your investment will be much easier for something like Arweave than a more established coin like ADA. Lower capped altcoins can be more rational, and this is why setting a percentage return for some of your sell-offs is a lot more of a safer strategy. Often altcoins are hyped up by retail investors who are just looking for a next 100x, and a more buy and hold strategy is more effective for established coins because they have stood the test of time and are sitting in that top 10 spot. These top 10 coins have proven their use case and proven their application and the goal that they have, and this is why they sit in that top 10 category. Creeping outside of this, you're getting into more of that speculative range. This is up to the top 20 coins, and then anything outside of the top 20, having a selling off strategy with your profits will maximize the amount of money that you can make from your investment. Keeping in mind that market cap is the ideal statistic to look at when you're thinking about the potential gains that you can make from a cryptocurrency. Looking at something like Shiba Inu, which is worth nowhere near even 1 cent, can make it seem like a very cheap coin, when in fact the market cap for it is sitting at $32 billion. Now, this price of the overall coin, this face value of it, is not representative on whether or not the coin is considered to be cheap. So keep that in mind, that something like Shiba Inu going up to $1 would put it close to the market cap of Ethereum, which is just something that is not going to happen. So don't get caught up in looking at the price of a coin when you're thinking of buying into it. Market cap is the be-all end-all statistic that will tell you the overall value or how much that coin is worth. Now that you're familiar with some of the best investing strategies for cryptocurrencies, you might want to look at my complete guide to cryptocurrency to help you build your knowledge basis on the topic. Check this video out on screen that will give you my complete guide to cryptocurrency. These are some of the things that I wish I knew earlier, and they would have saved me a ton of time and money. So make sure to check that video out so you don't make the same mistakes that I did.